Welcome everyone. This is commentary for March the 3rd, Tuesday. I'm going to make this very quick, but I want to show you what happened today. I talked to you yesterday about a tremendous amount of volatility that was going to unfold, and it certainly did, even beyond anybody's wildest dreams. We opened up last night down almost 50 handles, 47 I think it was, and the S&P futures ran 150 points above that level, actually more than that, 170. So not seen anything like this. Volatility is huge. I posted a video before this one you should watch. It's understanding the machines. This was all machine driven. Nothing was real that you saw today, and the volume was down substantially. I'll show you the details here. We'll go through it in a minute. But just to continue some opening dialogue, is that it's important to understand that what we're seeing here is massive short covering. The uncertainty is still out there as far as market participants. And the talk today was, okay, here comes the Fed. There's going to be a concerted effort with what's going on the planet by the Fed and different central banks. I've said before, I said yesterday, I've said in the conference call on Friday, this is not about money this time. It's actually about this emotional event, and what's been played up has really damaged the market. So these things don't repair themselves overnight. Today was impressive without a doubt. Let's go and take a look at some detail. So what I'm going to do for you in this chart is I'm going to draw what I think some of the possibilities are. I'm going to draw a couple possibilities here as far as what's likely to unfold. The primary pattern that is set up here is really obvious. Obviously, we got this big move down. We've got this move up. We could follow through a little bit, but this thing spiked out. If you watch the video I posted calling Watching the Machines Trading, if you watch that video, you'll see that this thing just blew up in the last 15-20 minutes. There was a 30 handle run where there was literally vapor. There was nothing there, no liquidity, nothing. But anyway, what we're going to see here, these moving averages are all going to continue to decline. And I'm just going to point out some elements on this chart. Right now, the PPM1 is at minus 0.9, minus 0.28, and minus 12 in the longer term. This will most likely flatten out here. But these two, the 21 and 10 period moving averages, are going to represent substantial resistance. Now, we could follow through tomorrow, and I'm going to show you some data points here in a minute once I show you these patterns. But what's likely to happen is we're going to get a move down and retrace some value of this big rally, maybe come down here, and then we're going to get another rebound, and two things are likely to happen from here. The probabilities of the market continuing and going vertical are not very likely, and certainly there's going to be at least a 12 to 18 day pattern that's going to unfold here. So as we continue this scenario, this is a no-go, okay? So I'm going to clear this and redraw this pattern. So most likely pattern that will happen is we will get some kind of a zigzag pattern, and then we will come down and we're going to retest this low. Very seldom does a climactic low like this not get retested. Now the pattern might be that we only retrace part of this, so maybe we come down in between these two bars here, but most likely this will be tested. And just in pure bars, we're looking at, like I said, probably at least 18 sessions, next 3 weeks. This is going to take a while to unfold. And this resistance overhead is going to be huge. And it's not likely, like I said, to do the previous pattern. So the most likely pattern, in my opinion, is still that we go down a whole nother leg and we end up here at around 2706, possibility of going down to 2600. Now this may never happen depending on what this pattern sets up. And I'm going to show you a couple other patterns just to show you the relevance of what I'm telling you. So let's take a look at another market cycle here. And this is the decline that happened here. I'll draw this back in again. So you see we had this steep decline. This is what I'm talking about. Rallies up into these declining moving averages, comes back down. In this case, it did basically a double zigzag. Then it went up. Okay? This is a really classic pattern. It's not likely to violate this, especially since we have, you'll see these PPMs were really negative, suggesting there's lots of downward pressure. Therefore, overhead resistance is substantial. So let's look at one more pattern. Okay, this pattern you'll all remember well. And this is the most likely pattern. So what I'm suggesting is the decline that we had last week would put us right here at this level. And what I just demonstrated, we get this zigzag and we go through these moving averages. This exact scenario, the 10-period moving average is going to define this rally back that we're seeing right now that we started today. Now in this case, it made another new low and then it did the zigzag, which is still a possibility. But then ultimately, after it did this flat pattern here, which is basically in these levels here, we had one more leg down. And this is the most likely pattern to unfold. And that's why what you saw today is a sucker play from the standpoint of jumping in and getting all excited. Now, those of you, the VPM users I mentioned, and I said something in yesterday's broadcast I never say, which is I usually never tell you to override. I told you that you want to scale out of this thing, and most of the activity is likely to happen sometime as we get in toward Wednesday. This thing could even fail tomorrow or Wednesday and then start some other patterns. But the pattern itself, let's go back to the current pattern so I can just discuss what the likely. From the high, we actually had 8 bars down, and there's a pattern that could be what we call an 8-5-8, which would mean we'd have, this is first bar, we'd have 4 more days trading in a range, moving into this moving average, and then we'd have 8 bars in the next pattern that would likely make a new low. It would match the pattern I just showed you. Then we set up a larger zigzag, and then all of a sudden we're talking about sometime in June, this thing is ready to roll over and we do another leg down this summer. All this whole configuration can change, but the expectation for at least the next 3 weeks is going to be pretty powerful, and it'll take at least 3 more weeks, as many as 5, to actually set the pattern up. So I'm just going to bring up, while we're here, I'm going to look at a weekly graph here, and you'll see all we're doing right now is we're going to do an inside bar on the weekly bar. We've also did something else, and I talked about this in yesterday's commentary, as we rebounded back above the 200-day moving average. So if I go back to the daily graph here, you'll see what I'm talking about. We went just back above the 200-day. We sliced through it like it wasn't there. We rebounded back above, but I think this is going to be the pivot area where we're going to be back and forth over the 200, and that's right now, that's the 3048 level. So that's going to be your pivot area. So we're probably going to trade above and below that number. As I said, we traded all the way up to 3090 today. It's possible that we could trade all the way into, as far as the numbers go, for today. We're really looking at the possibilities on the daily range of going to 3120. The projected possible range for tomorrow on the upside is literally 140 points, because the 3-day volatility indicator is off the map now. So usually what is likely to happen is we're going to see volatility contract. So I'm trying to keep this pretty tight on what to expect as far as the markets go. So I would continue to lighten up into this rally. I would not buy into that there's going to be a fix. Maybe I'm not sure the Fed's going to do anything. And certainly my argument is, and has been all along, is that this entire situation around the virus has been somewhat bogus. Not that it's not real, just that the amount of infection that's happening, and I understand it's very highly infectious, but it's also it's not, it's not as deadly as SARS and some of these others have been. And most of the people that have died have had other issues and they're old. I don't want to listen, I'm not a doctor. But the bottom line is that this market was broken. And when you break a market, it takes multiple days. There's so many moving parts. And just looking at the S&P 500, that it takes a while to repair this, for patterns to stabilize. There's a whole lot of work to be done, and this thing is long from over. So tomorrow, there's no way to even estimate off this. I'm going to put up a hourly graph, which probably is a much better way to look at it. This hourly graph is suggesting that we could still see 3103 is the number there, but you've got lots of upward momentum. I'm going to put up here the futures, and they're up 13 right now, and but they faded off of the close yesterday when that run that I talked about in the previous video. It ran up 30 handles. Well, they took all that back by the close, and so now it's bouncing back a little bit. And the other thing I want to point out, the volume yesterday was huge. It's still 7.6 billion, but it was down almost 16% from Friday. I expect to see this thing continue to contract. And remember, we've got ADP. We do have economic news. We'll see if anybody can actually talk or focus on any of this. Anyway, I hope this video was helpful. Make sure you subscribe and like so you know when I do the next video. I'm going to continue to do videos every night until this thing stabilizes. There's way too much to try to describe in a written document. Anyway, have a great day.